Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin continues bleeding lower, now trading around $63,188 after breaking through the critical 64,000 support zone. The flagship cryptocurrency has declined nearly 50% from its October 2025 all-time high of $126,000, with traders watching whether $60,000 will hold. The immediate catalyst stems from escalating tariff uncertainty and broader risk-off sentiment. President Trump announced a 15% temporary global tariff using emergency powers after the Supreme Court struck down earlier implementations. This policy whiplash has rattled equity markets and pushed Bitcoin lower as it continues trading as a high beta risk asset. Technical analysts warn that a sustained break below $60,000 could trigger another wave of liquidations, potentially pushing Bitcoin toward the mid-50s. Roughly $2.2 billion in leveraged positions face liquidation risk if that support fails. Institutional flows paint an equally concerning picture. Bitcoin ETFs just completed their fifth consecutive week of outflows, shedding nearly $4 billion in total. Trading volumes have plummeted to their lowest levels since July 2025. BlackRock's Bitcoin ETF alone saw $116 million exit last week, while the broader crypto investment landscape recorded $288 million in net outflows. Perhaps most telling is the behavior of corporate Bitcoin holders. Bitdeer, one of the largest mining companies, liquidated its entire Bitcoin treasury this week, selling over 1,000 coins for an estimated $68 to $79 million. This marks a significant shift from the accumulation strategy that dominated 2025, with corporate holders now in a 3-week selling streak. On the positive side, the Ethereum Foundation announced it has begun staking approximately 70,000 ETH from its treasury to generate ongoing revenue. The foundation deposited an initial 2016 ETH using distributed validator technology. At current staking rates near 2.8%, this move will redirect meaningful income toward protocol research and ecosystem development. Regulatory progress continues advancing despite market turbulence. Crypto.com received conditional approval from the Office of the Comptroller of the Currency for a national trust banking charter. The Federal Reserve also opened a 60-day comment period on permanently removing reputational risk from bank supervision frameworks, a move crypto advocates say officially ends Operation Choke Point 2.0. Looking ahead, Standard Chartered projects the stablecoin market will reach $2 trillion by end of 2028, potentially generating $800 billion to $1 trillion in new U.S. Treasury bill demand. This structural shift could reshape government financing and allow Treasury to increase short-term issuance. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.